Well, good afternoon and welcome to the end of day market review for February 23rd, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'll be walking us through today's presentation. Now, before we get into the presentation, we are going to ask that you give this disclaimer a quick read. Once we're done, we'll go ahead and dive into the agenda. All right. So our agenda, pretty straightforward, is starting with the daily news. What we want to do is we just want to poke our heads in and see what's happening on a global scale and see how it's affecting the U.S. markets. We'll then go ahead and take a look at the market outlook, where we'll be looking at the S&P 500. While we're looking at the charts for the S&P 500, we're going to be looking for the support and resistance levels, as well as the current location of the MACD. With this information, we'll be able to go ahead and get an idea of just how strong the marketplace is and how aggressively we can start thinking about trading. We'll also take a look at the volatility indicator, the VIX.X. With this indicator, we'll be able to identify how much volatility is in the marketplace due to the amount of fear. The higher the volatility, the less that we'd want to be putting into the marketplace. So we'll be taking a look at that. There are a few stocks on our watch list right now, so we'll go ahead and take a look at those today. Though there is nothing from our previous pick yesterday, so we are going to end up fast-forwarding through that and getting into preparing for tomorrow. This just means that we're going to recap everything that we've discussed, and we're going to do so with basic customers in mind first, and then change gears a little bit for advanced customers. They end up going down a slightly different path because of their enhanced knowledge. If at any time anybody has any questions, all you need to do is send in a message to our chat box where I will answer that question at the end of the presentation. If you end up raising your hand, I can unmute your phone and you'll be able to ask that question verbally at the end of the presentation. And then for those of you who are watching this presentation on your computers after the fact, because you weren't able to get to the computer for the actual live presentation, we will be checking our emails regularly. If you have any questions, simply send us an email to training@idealtradinglifestyle.com, where we'll be more than happy to get that question answered on the next day's installment of our end-of-day market review. So with that said, I am going to jump right in and start by heading off to Yahoo Finance. So we end up having a little bit of a back and forth day. It started off looking a little bit lower. Some key things that dragged it down a little bit would be Safeway. They ended up plunging 10% after reporting a 6% drop in profits. It seems that the grocers are really struggling to deal with the economy right now, with oil continuously rising in price and cost-conscious shoppers looking for that bargain. It makes for a difficult time. We were, however, able to see the S&P 500 push itself up and close at a 10-month high. And we'll be taking a look at that in just a moment. So let's actually just go back here. I wanted to make reference to Yahoo Finance's homepage. A great way to just get a quick snapshot of what's going on right across the board. Now, one of the things that you're going to notice is that the Dow Jones up to 12,984. The only thing that was down was actually the 10-year bonds. You see even things like gold and oil just pushing themselves up higher and higher. Now, obviously, the oil is rising due to the struggle with Iran, and they're cutting their supplies. All right, let's jump in here to the S&P 500. And you can just see we like to keep this part nice and clean and simple. Obviously, we can draw more lines. We can draw some channel support and resistance levels. And we can really just get into the big picture. But we really just like to focus on what's happening right now. And you can see that with the S&P 500, it's been trading in a very tight trading range since the last portion of December. It's slowed down and it's come close to dipping down a few times, but we can see today it's now found support like it has many times in the past. Excuse me, and it's currently trading at 1363 with room to grow to its upper resistance level somewhere around 1370. So definitely a positive sign, definitely emphasis that the markets are going up and people are happy pushing it up. The MACD, though, is really starting to just trade sideways. And it's had its ups and its downs, but you can see that for the entire time that the S&P 500 has been trading in this tight range for January and February, the MACD has also been very tight. And it's just a matter of a good day versus a bad day that pushes that MACD into positive or negative territory. So right now, we are actually looking at a flat bullish MACD with the black line still trading down below the blue line. We have one more good day, and we could push that MACD up into a rising bullish. Have another bad day, and it could probably end up back into a declining bullish. So it doesn't take much to influence that MACD right now. And until we see an actual breakout from the support or resistance, we're going to be expecting a lot of slower days, just like we are experiencing right now. And we can actually further emphasize that by taking a look at the volatility indicator. It's down to 16.80. Now, what this means is there's not a whole lot of volatility going on right now. For the most part, people are level-headed and very aware of what's going on in the marketplace. Because of this, you're not going to be seeing dramatic price changes in the marketplace. You're not going to be seeing triple-digit gains or triple-digit losses on the Dow Jones. Instead, we're just going to be seeing slow and steady gains, and if things go bad, a couple of down days, nothing catastrophic. This gives us, as short-term traders, the encouragement to go ahead and start trading more aggressively when we find something that meets our criteria. It means that we don't need to be concerned of large losses. Now, we certainly would be concerned if this indicator starts to work its way up towards 20. Definitely start to question things and become more cautious if it works its way up towards 25. And certainly once it passes the 30 mark, which is its threshold there, we'll say, you know what, things are getting really too volatile, and any trading is just going to be very, very scarce at best. So right now, things are looking good with that, and we don't need to be too concerned. All right, so what I'm going to do now is just go ahead and open up our basic watch list. Now, it looks like we've got a few to choose from. Let's start off with NFG. All right. All right. So right off the bat, we can see that this guy is not meeting market conditions. And although it looked good at first glance, we can see that the MACD is bearish while the S&P 500 is bullish. So this guy is not meeting market conditions. Advanced customers, you might be able to get something out of this. Volume increase is looking pretty good. Looks like it's even broken out potentially. Let's just see what's going on with this long term. So it's going to have some resistance up above there. But it looks like it's broken out beyond this, so back on the 17th. So yeah, basic customers, you might want to be a little bit cautious with this one. If you do trade it, use some discretion. Advanced customers, dig a little bit deeper, pull up your daily EMAs, etc. Though I do see this resistance around $50. That's something to be concerned about. Let's see if we can find something else. All right. RRD. All right, so this guy is rising bullish, black line over top of the blue line. Now looks like volume is really good. It's got a bit of an increase here. Curious to know what happened back here in January. It looks like it was doing the complete opposite of what the markets themselves were doing. I question if it was maybe an earnings report or whatnot. Nonetheless, since that decline, we've seen this guy just rising. It's actually just met support today, which begs the question, will it continue to go up? We do have some resistance right here. So not the best as far as resistance goes. It would have been nicer to see a breakout above that. Advanced customers, put this on your list of or stable of stocks. See what happens if it breaks it tomorrow. If you see a breakout, it might be worth trading. All right. Next up to bat, we've got STT. All right, so we're looking at a pretty uneventful MACD. It is bearish right now, and black line is down below the blue line. So you need to see a crossover, black line over top of the blue line, if we're looking at a bearish stock. So we're just going to say no thanks to this one. All right, moving into the NASDAQ, we've got FORR. All right, it looks like the black line has just crossed through the blue line while being bearish, though it's not meeting the market conditions. I'd even say if we look back at our flow charts for our basic customers, one of the things would be, has the stock returned to a predictable pricing pattern after an earnings report? I would say this guy is still pretty unpredictable. It had a gap down in the middle of February, and it hasn't really shown where it's going to go from here. Is it going to continue to flatten out and fall, or is it going to go up and rise? A little bit too early in the game to make that assumption. Advanced customers, you might find something interesting with this one, though. All right, and the last one, SCHN. All right, now this one's looking pretty good. We've got a rising MACD. Black line is over top of the blue line. It looks like we've had a nice little run this week with its candles and a nice increase in volume. Of the bunch, this is the one that is jumping out to me as the nicest one. We've got some good short-term support right here. If we look at the long-term resistance, it looks like we've just broke past that resistance level today. This one's going to be getting my vote of approval. I haven't gone in and taken a look at the earnings. I haven't looked at its individual news, but if there's one that I will investigate a little bit further, this is going to be the one. So there you go. We've got something to look at for tomorrow. Basic customers, go ahead and see what ends up happening with the watch list. You might have a couple more stocks that come and go in the next short little while. Do your homework, and if tomorrow morning news and futures are looking positive, go ahead and go ahead with that trade if you like it. Advanced customers, obviously you've got a little bit more homework to do. You can start going for larger profits depending on where your overhead resistance is, but you still need to make sure that you're doing all of your homework, which includes the opening news and futures tomorrow morning. Right now it seems the markets are wanting to go up, so if you do plan on trading any ETFs, you're going to be looking at some ultra ETFs that are on the long side. If you're feeling up to it and tomorrow morning you're looking at negative earnings or futures, you could always go ahead and look at an inverse. But you are going against the grain, so make sure that your trade is casual. And it looks like we just got a couple of questions here, possibly. Let me just see. Can we look at the TSX stock? Yeah, let's go ahead and do that. Oops. CA.X. CA.X. All right, so what do we have here? We've got a rising bullish MACD. And before well, you know what, it's rising bullish. That's good. Chances are the TSX is similar. Volume, nice increase in volume. Looks like it's got its short-term support right about here. Looks good. I'd be questioning this cycle high right here. Yes, it's bullish, and yes, bullish stocks have a tendency to break resistance, but that looks like a fairly substantial cycle high there. It's actually looking like it's closed. Let's see, 1281 versus that one, 1287. So it's really just within a few cents of that cycle high. I wouldn't be as comfortable with this one as I would with that pick that we just looked at for the U.S. market. And let's see what else we got here. Some support there. Yeah, that's about its trading range right there. So it had a little bit of a blurb that one day. Good. All right, guys. So with that said, this has been the end of day market review for Thursday, February 23rd, 2012. Here's to having a good trading day tomorrow. We'll touch base then. Ciao for now.